But now you've asked me enough questions. Let me start asking you a few. In your experience of coming to UAE and coming from a matured market like India, there are no compliances when you came in. The awareness was very, very low. One is how did you went about doing it, but also focus more on what from a business point of view is the right way of choosing an approach for the transfer pricing as a compliance.
Yes, it was tough landing here and doing all these things, but with guidance like yours and people, the blessing, it was always easier to start with. And people, once the fire lights up, once knowledge gets transmitted, the most important difference that I see between India and UAE is India is almost 20 years, and it has saturated market on transfer pricing aspect is concerned. Litigation is just settling right now in terms of most of the top. So I know exactly that what is going to happen tomorrow.
See, that's where I just want to point out few things that, and what I see is that when India took 20 years in that process of maturing with use of technology, this country may not take that long. Even today, like you said, when they are releasing the law itself, they are very focused and they are very clear. There are few things like they don't want to introduce safe harbor right now purposely because they want to get everybody into it. So that's the approach, which is already a matured approach. In your experience now that you started and what we are seeing now, what are the misconceptions? Do you see this?
I'll tell you the top 4-5 misconceptions. When you talk about a related party transaction, disclosure requirement versus the compliance, benchmarking versus the local file, even that is not understood by most of the consultants still now. When you talk about benchmarking, they say it's already at arm's length, not required. Next question. That's how they kind of stop you.
So let's understand this other way. Are you seeing that people are seeing this more as a compliance only requirement, or is there anything else to it?
They are looking at it as a cost at the moment. They are not understanding that if this is planned well, you can actually do the operational transfer pricing and you can make sure that it can ease your life much more better for the next 10 years or 5 years till it is made. So the planning part and the compliance part are not being looked at all.
That's the problem. And that's why we are only seeing people rushing to put together a report which they need to file the return.
They're just looking at it like a piece of paper that, take this as a TP report and file. That's it. Another important thing that I wanted to say is on the functional analysis. What margin, how are they justifying is the aspect that they're looking at. Benchmarking is not at all a price setting. It's through your operations that you have to actually justify that how I and my price is at this level. And if you are in losses, if you are in capacity utilization issues, if you are in QFZP versus mainland, how actually you need to justify.
Also, part of the problem is that we have to blame on some of the professionals. Some of the professionals are only looking at it as an opportunity for them to charge some fees. But look, at the end of the day, the onus is on the business. And that's where now selection of the right partner comes in. That whom do you trust for your compliance? And this is where I think the biggest issue is that clients are still not fully educated enough of what is the depth of this compliance required, why it is to be used and who has to do it, and why this is acceptable and why this is not acceptable. So all the more reason for us as professionals is to spread the right message.
There's a detailed process that is there in the TP guides on how the benchmarking has to be done. So related party and connected person identification is the key. They have also put a tab on the opening balances as on 31st December 23 and 1st January 24. The transition has to be at arm's length. So we start with the opening balances. The terms of these transactions and the way in which these transactions have been done with the other related parties. These terms and quantification and the remuneration methodologies of these transactions. If this basic part is analyzed by the audit teams or the tax teams or the business owners themselves, I think 80 to 90% of the job is over, sir. The rest of the 20%, 30% job that I will take all this data and I will go into the benchmarking databases and search for the data. When you have such clarity and such details, it's a 120 odd page document. So the relevant references from OECD with para numbers, page numbers, we have given so many articles, we have done so many things together. And if those particular references are even looked at as do's and don'ts, and if you can, it's just 120 pages. So OECD references have been used, so there is nothing as a alien law that they have brought in.
This is where I would say that accounting discipline is not there. I think the maturity will come over a period, but it's something that we need to stress more and more, that when the audit happens here, they will use technology. They'll pick up the comparable very easily. And there's a huge misconception on connected person payments.
The owner, manager, director, or the decision maker, this categorization itself is a major thing, sir. I've seen M&Es and also people who are much larger here, the reluctance of not able to give the data also. They say that this is confidential, this is not to be given. When they come, we will see. That's the kind of language. But the point is, if the profiling is done and if they are absolute professionals working on par with any other employee and taking on par remuneration, then there is no problem. So these are the category A. But there are always the second category of people who say that yes, it may be applicable, but I'm working. They're really working.
It's not the question of worrying. The main issue is that two things. Generally, in most of the TP laws internationally, there is no connected person concept. When we come to connected person, I'm saying, okay, if I'm working, should I compare with an independent HR database or should I compare with the margin?
Very good question, sir. So from most of the market, 80 to 90% of the market, they are going with some HR indicative numbers or the percentages or the package kind of details. But if you ask a owner on how much he has to withdraw from his own business, there is no limit.
So therefore, what you're saying is that one needs to adopt both
the methodologies.
So you have to do a TNMM to do a margin analysis of what is left in the business after charging that. Is it comparable with similar businesses or not? And you support that further with maybe an HR and other comparison.
But if your effective documentation and the expectation of the TP guide and then the rules and the experience is taken into consideration, and if you have a full-fledged documentation, audit proof, fool proof, then you can sleep peacefully, and that's the compliance that is expected to be done.
Yeah, but I don't think even 20% is doing that. We have a lot of scope to go there. Let's look at it positively, right?
See, from overall life cycle span is concerned, now I think we are in a process of benchmarking and closing right now. But if you see the identification of related party and connected person and benchmarking aspect of those transactions is to be done, it should have been done during the initial periods of 24 or later parts of 24. We are at 25 and we are filing. So it's a web of benchmarking, planning goes together. And I'm seeing that coming in the next 2-3 years. And if any of this phases of life cycle is not planned properly or if it is not done properly, then all of us are going to meet there in the last leg.
We must highlight the fact that internationally TP litigation is the highest revenue earner for the tax authorities. I would say 60 to 70% of the litigation are around TP, and therefore one cannot discount this any longer going forward, is what I would kind of stress on. But that's the whole point of we doing this, that we will circulate, we'll try and educate people that this is what one needs to look at. Don't look at this only as a compliance tool. Try and use this more sophisticatedly, plan your affairs better, and therefore based on that justify your margins and taxes. That's what I would urge people to look at it that way.